Welcome back to the channel, everyone. Today I want to talk about how FBI search warrants have just been issued. It's not just the SEC investigating short sellers, and it's not just the Department of Justice aiding in the SEC investigation. FBI search warrants have now actually been issued. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Unusual Whales just tweeted saying breaking news. The Department of Justice have confirmed that their investigation is not just to do with the communication between short sellers and research firms, but they're also investigating the trading, including market manipulation and order spoofing. So the Department of Justice have confirmed that they're not just investigating short and distort schemes, where hedge funds and short research firms work together, but they're also investigating actual market manipulation and order spoofing as well. It says the Justice Department is now targeting spoofing and scalping in short seller investigation, but also added that Muddy Waters' Carson Block has been served with a search warrant in the probe of illegal trading tactics. And now here is where all the FBI search warrants come into play. It's not just Carson Block that received an FBI search warrant, there's more involved as well. It says here, Carson Block, the fiery short seller behind Muddy Waters, was served with a search warrant by an FBI agent in October. People familiar with the matter have said. But you may remember that it's not just Carson Block of Muddy Waters. The FBI also seized computers of short seller Andrew Left of Citron Research back in early 2021. So it's now not just the SEC investigating short selling and doing a terrible job. It's not just the SEC referring in this case over to the Department of Justice. Actually, the FBI are also involved as well. Now you may say, Tom, what's the big deal with Citron Research and Muddy Waters? Aren't we supposed to be focusing on the big guys like Citadel? Well, actually, you may remember that Andrew Left is a popular Twitter figure and prominent short seller. Citron Research went hard on GameStop stock back in early 2021, back in January. But on top of that, Muddy Waters is also still shorting AMC and GameStop. And therefore, even though at the moment it looks like they might just be going after Citron Research and Muddy Waters and Melvin Capital, don't forget about those guys, they're going after the smaller firms first so that they can then get to the big guys. As the big guys like Citadel are much larger, they've been around for a lot longer, and they have a much larger legal team, they're significantly harder to investigate. Obviously, Citadel know how to conceal illegal market manipulation, and their legal team is so big, they can make it so the SEC won't be able to find this market manipulation for 5, 10, maybe even 30 years. But if the FBI, the DOJ and the SEC go after some of the smaller guys like Citron and Muddy Waters and Melvin Capital, they'll effectively uncover that market manipulation and just find the other side of the transaction, which is obviously going to be Citadel. And the article says federal prosecutors are investigating whether short sellers conspire to drive down stock prices by sharing damaging research reports. Now we knew that part, but it also says that they're now investigating whether these short sellers engaged in illegal trading tactics. Order spoofing and order scalping or short laddering is exactly some of the major problems we've been facing over the last year, and this is one of the only reasons as to why the hedge funds have survived this long. If not only the SEC, but also the DOJ and also the FBI are now investigating these order scalpings or short laddering and order spoofing, now we're going to start to see some change. But on top of that, the SEC, along with the Department of Justice, is investigating whether bankers may have improperly tipped off hedge funds ahead of large share sales. Now this is obviously the collusion and the delaying of retail orders so that a big chunk or block of retail orders can be put through at the end of the day or after the market close, just as short sellers short more shares to basically balance out all of our retail buy orders. And again, the SEC, along with the DOJ, is also investigating this malpractice and form of market manipulation as well. It says broker-dealers frequently buy and sell blocks of shares, either on behalf of clients such as you and I, retail investors, or as part of a hedging strategy, which are large enough to move the company's share price. But obviously if these giant block trades are delayed and put through after the market close and they collude with the hedge funds so the hedge funds can short the same amount of shares, then obviously the share price isn't affected. And this is how they've been able to mute our buying pressure for so long, putting through our buy orders all at the same time as they short more shares and effectively borrow the shares we've just bought to short and to make sure the price doesn't rise. And it says information on such share sales ahead of time could be extremely valuable. Inappropriately sharing material, non-public information, could run afoul of US laws. And most importantly, the SEC has sent subpoenas to several hedge funds and banks demanding trading records and information about investors' communication with bankers. And I think most importantly out of this entire article, it says investigators are probing whether bankers improperly alerted favoured clients ahead of public disclosures of trades and if such information benefited the funds, some of which act as liquidity providers to Wall Street firms. Now, there are very few hedge funds which also act as liquidity providers or market makers. In fact, I only really know of one, and that is Citadel. And therefore, this is quite literally saying that investigators, being the SEC and the DOJ, are probing whether bankers tipped off Citadel. I think this is giant news because it basically confirms the indirect investigation into Citadel. Not only are the SEC and the Department of Justice investigating Muddy Waters, Citron and Melvin Capital, but they're also investigating the bankers that may have tipped off Citadel. Guys, if you're worried about holding your AMC in Fidelity or in E-Trade due to all the recent glitches and the fact that Fidelity actually supports short sellers, Moomoo are currently buying you a free share of AMC on top of their usual 5 free shares when you sign up to Moomoo using the link in the description below and make your first deposit. When you sign up to Moomoo and make your first deposit, you get 2 free shares valued up to $3,500 each. But guys, if you can deposit $100, then you also get a free share of AMC bought specifically for you. And guys, if you can deposit the full $2,000, then you also get an extra 3 free shares, all valued up to $3,500. Moomoo is also a brilliant commission-free trading platform that doesn't make its money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also has excellent technical indicators and advanced charting tools. Moomoo also publishes daily short selling volume on top of position cost distribution and a number of other key data points. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free shares and a free share guaranteed of AMC. And as always, Adam Aaron was sure to give his opinion by tweeting saying, well, would you look at this? The Justice Department is pursuing a wide-ranging investigation of short sellers. Federal prosecutors are investigating whether short sellers conspire to drive down stock prices. Adam Aaron knows that AMC has fallen foul to illegal short selling and market manipulation for many months, if not maybe even many years. Adam Aaron is finally getting exactly what he's always wanted. And funnily enough, Adam Aaron getting what he's always wanted, being the Department of Justice and the SEC and the FBI investigating these short sellers, is also exactly what we want because it means these hedge funds are going to be forced to close their short positions. Obviously, when the Department of Justice continues this investigation and not only finds massive amounts of market manipulation, but also massive numbers of synthetic shares, they will effectively force these funds to close out all of these synthetics. They will also force them to stop manipulating the market and to stop trying to keep the price of AMC and GameStop down, which will effectively allow the stocks to run. And when this market manipulation is finally stopped, they won't be able to keep the price of AMC down any longer, as the only reason that AMC has been kept down for so long is due to all the market manipulation and the crime. And I think it's really important to remember that if the hedgies could cover and get out entirely unscathed, they would have already done it by now. They managed to push the price of AMC down all the way from $72 a share down to around $13 to $14 per share. We've now obviously hit that bottom and we've been rappelling upwards back over that $20 region. If the hedgies could actually close their position without going bankrupt, they would have closed at $13 a share, taken their profits and been on their merry way. But obviously because these hedgies have created so many synthetic shares and there's so much market manipulation and corruption going on at the very moment, it's obvious that the hedgies just can't cover without going bankrupt. Even at levels as low as $13 a share. And you may say, Tom, $13 a share is fairly low. Why can't the hedgies cover there without going bankrupt? And it's because obviously they've been shorting it all the way down from $2 a share and below. So even though $13 a share is fairly low, even at that point they're still sitting on massive unrealized losses, and those unrealized losses now are starting to get even bigger as AMC is returning upwards. The poster says apes own 90% of the float, or potentially the float many times over. If hedgies actually did, or they could close, don't you think they would have closed the visible self-reported shares first to try and scare the apes away? He said obviously they know that we know that they can't close without going bankrupt. They know that apes don't sell, and they know that apes won't sell until we get the price that we want. He said we know that there are billions of synthetic and fake shorts that they need to close. They know that they are screwed and can't close without going bankrupt. He said we know that if they do close their visible shorts, those 100 million or 120 million shorted shares, then the price will obviously start its lift off, and FOMO will obviously kick in. Because we know that even if they close those 120 million visible self-reported shorts, we know that that's not all of the shorts being closed, and therefore, as the price starts to rise, we'd continue to buy and cause the mother of all short squeezes. So this is why the hedgies are stuck massively between a rock and a hard place. They can't cover their shorts without going bankrupt, and that's obviously why they're just trying to never cover their shorts and continue manipulating the market. But obviously they also can't continue their market manipulation forever, because it's now not just the SEC doing a terrible investigation, it's also the Department of Justice and the FBI that are actually making proper moves. The FBI and the DOJ have been issuing subpoenas left, right and centre, they've been confiscating personal computers, and they are actually doing a proper and thorough investigation. And therefore time for the hedgies is just simply running out. Those hedgies can't continue shorting AMC forever, because if they do, then the SEC, the DOJ and the FBI are just going to close them down. And I think one of the most important signs that the MOAS is just around the corner is the masked investor tweeting it's day 5 for AMC and GameStop having that 100% utilization rate. Today is going to make that day 6 of 100% utilization for AMC and GameStop, which shows that the MOAS is literally around the corner. 100% utilization is something the hedgies can't escape from, because that means that the shares are already shorted and that no more can be shorted and no more can currently be created. Therefore, AMC and GameStop will soon be starting its run up onto the next leg of the squeeze. Guys, be sure to let me know down in the comments below what you think about the FBI search warrants finally being issued. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.